Good afternoon. Welcome to the Monetary Policy Stance Press Briefing. Let us welcome the following BSP speakers. Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor Eli M. Remolona Jr., Deputy Governor Francisco G. Daquila Jr. of the Monetary and Economic Sector, Senior Assistant Governor Iluminada T. Sicat of the Monetary Policy Subsector, and Managing Director Zino Ronald R. Abenoja of the Department of Economic Research. Governor Remolona will now deliver the statement on the monetary policy decision.
Good afternoon. Magandang hapon po. At its meeting today, the Monetary Board decided to keep the BSP's target reverse repurchase rate at 6.5%. The interest rate on the overnight deposit and lending facilities also remain at 6% and 7% respectively. The risks to inflation outlook continue to lean toward the upside. Potential price pressures are linked mainly to higher transport charges, food prices, electricity rates, and global oil prices. The BSP's latest forecasts indicate that inflation would settle close to the upper end of the target range. The risk-adjusted inflation forecast to 2024 eased to 3.8% from 4% in the previous meeting. Meanwhile, the risk-adjusted inflation forecast for 2025 rose to 3.7% from 3.5% previously. Inflation expectations remain well anchored. Based on the latest GDP data, the expected path for domestic output growth over the medium term remains largely intact, even as recent indicators point to continued moderation under tight financial conditions. The Monetary Board deems it appropriate to ensure sufficiently tight monetary policy settings until inflation settles firmly within the target range. A restrictive policy stance will also help keep inflation expectations anchored amid a possible buildup in upside risks to future inflation. The Monetary Board reiterates its support for the national government's non-monetary measures to address persistent supply-side pressures on food prices and to prevent further second-round effects. Moving forward, the BSP remains ready to adjust its monetary policy settings as necessary in keeping with its primary mandate to safeguard price stability. Thank you. Maraming salamat po.
Thank you, Governor. At this point, we would like to request Deputy Governor Daquila to elaborate on the BSP's latest inflation forecast for 2024 to 2025.
Good afternoon, and thank you for this opportunity. In the press release of the Monetary Board and the Governor on the policy settings, it was mentioned that the risk-adjusted inflation forecast for 2024 was adjusted downwards from 4.0% during the previous meeting on the monetary policy stance held on the 8th of April to 3.8% for this meeting. And for 2025, there was actually an upward adjustment from 3.5% in the previous meeting to 3.7% in this current meeting. The risk factors that were incorporated into that assessment of the forecast includes those that were already mentioned in the policy statement, namely risks pertaining to higher transport charges, food prices, electricity rates, and global oil prices. In our scenario building, we've also considered some factors that went into the baseline forecast, and this include the lower than expected actual inflation in April, prospects of the May inflation also being lower than what we had initially considered during the April monetary policy meeting, and that would lead to lower inflation forecasts for 2024. But on the other hand, we do have higher global crude oil prices and also non-fuel prices, as well as the current slightly weaker peso, leading to an increase in the baseline inflation forecast for 2025. So, thank you.
Thank you, DG Datila. We now proceed to the questions from the press and market analysts. The governor can take 2 to 3 questions, and then for the rest of the questions, our panel may answer. This will be the order of questions. First, we will entertain questions from in-person attendees, to be followed by questions sent in advance, and lastly, online or any additional questions. We will begin with our media colleagues who are here today. Reminder to raise your hand and wait for the microphone to be handed to you. Please state your name and identify your media organization before asking your question. Do you have any questions from the floor?
Good afternoon, Gov. I'm Micah Arceo from the Manila Times. You previously mentioned that easing of rates is possible by later this year or early next year. But since you adjusted your inflation forecast for this year downwards, is it still the your target for this year? Is it still the same po?
Thank you for that question. We're actually somewhat less hawkish than before, which means we could cut rates Q3 or Q4 this year. So the second half of this year.
Thank you, Governor. Any other questions?
Gov, given that, given your earlier statement, does this mean that the RR cut will not happen until first quarter? Maybe
We haven't
next year?
discussed the RRR, but it goes into the agenda once we start easing.
Thank you, Governor. Do you have any other questions from the floor?
Hi, Gov. This is Keisha from the Philippine Star. To clarify, and correct me if I'm wrong, but I think the only meeting in the third quarter is on August. So would you say that the BSP can begin easing by August this year?
Yes. Possibly by August of this year.
Thank you. Do you have any other questions?
Just to seek elaboration, Gov. Why are you less hawkish now? And okay, and then the second part of my question is, so the easing that you said before was as late as first quarter 2025. So that's not gonna happen anymore.
Yeah. As you know, there was a good number in April, 3.8%. That was mainly driven by rice inflation. But also 3.8% was better than expected. And actually, it's better than it looks because that included some positive base effects. So it's actually better than it looks. And then there were other factors that were good news in terms of inflation. I'm afraid I have to leave. I have an event to catch, but thank you very much. The hard questions will be taken by Francis Tequila and Lucy Cat and Zeno Abenoa. Thank you.
Thank you, Governor. Do you have any questions? Yes.
Good afternoon, Louisa Hoxon from Business World. Just to clarify, sir, did you revise or keep your baseline forecast for this year at 3.8? And
So we did also have slight revisions on the baseline forecast numbers. For 2024, from 3.8% previously, the new baseline is at 3.5%. And for 2025, from 3.2%, the baseline is increased slightly to 3.3%. The factors that went into the revisions of the baseline are those that I had enumerated earlier, and that the governor already mentioned. Lower than expected actual inflation in April at 3.8%. Again, as the governor mentioned, it's mostly also because of base effects. And actually, if you were to look at the factors behind that April inflation number, more than half of that is attributable to just one commodity, which is rice. So it's not really a broad-based inflation number. As for the upward revision in the baseline forecast for 2025, we're looking at higher crude oil prices in this forecast round, also non-fuel prices. And as you very well know, the peso is trading at a slightly weaker band.
thank you. Just one follow-up, sir. In the BSP's previous statements, you mentioned you see inflation accelerating to above target in the next few months. Since you've revised lower your risk-adjusted and baseline forecast, is that still the same?
That may still
outlook?
happen. It will be again because of positive base effects. We're looking particularly at the period May until July of this year. So we just monitor the inflation numbers carefully then. But even if there were to be some breach of the inflation target band during those months, the expectation is that that will be temporary, and then there will be a reversion back to the target band after that period of time.
Thank you, DG Dakila. Do you have any other questions?
Did you clarify lang nung 2025 baseline? Is it 3.3? Did we hear you right?
It's 3.3%.
3.3.
Yes.
Did-
From 3.2% previously. That's for 2025. For 2024, it's at 3.5%, down from 3.8% previously.
I think if I remember correctly, the BSP previously forecast inflation to may have breached the upper end of the target in the second quarter, largely due to base effects. But
Forecast inflation to
breach the upper end of the target, and we haven't
Yes.
seen it.
We haven't seen it,
Yeah.
but as I've replied to the previous question, there can still be a some breach, especially during the months of May, June, and July. So it
Okay.
will be still in the second quarter of this year, and that's driven by base effects. After that, actually, the base effects can go in the opposite direction. The base effects will be negative.
So, based on your forecast, we expect inflation for this year to peak by around June and July, and then it will start
It
easing.
should start tapering after that period of time. Of course, that is in the absence of further supply shocks. And as we mentioned in the press statement, we're still emphasizing the risk-adjusted inflation forecast, which is higher relative to the baseline. The risk-adjusted forecast for this year is at 3.8%, but compared to the previous meeting where we were seeing a possible inflation rate of 4%, which is just at the upper bound of the inflation target band. We're now more comfortable that inflation will be it will now be within target, but it may still be elevated depending on what risk factors still materialize.
Thank you, DG Dakila. Any more questions?
Yes.
There. To our speakers. I think in the minutes of the last meeting, there was a part there saying that GDP growth may moderate in the second half. So is it still the case?
I would that is in the press release, but the more important thing there is that the as stated in the press release, the path for domestic output growth over the medium term remains largely intact. That's what we have seen since in Q1, the economy has remained in the forefront of the growth numbers in the region. And thus, the governor has said in his earlier response to the question from the press, we're a little bit less hawkish now. So he's saying either a third or the fourth quarter, there's a possibility of an adjustment, a relaxation in the monetary policy stance. So I would say that if inflation continues to moderate and revert back to within target, then it's going to be a win-win situation for all.
Thank you, DG Dakila. We have another question.
DG, if you look at the new risk-adjusted and the baseline forecast for 2025, you've adjusted it upwards from the last.
2025.
Yeah.
Yeah.
What gives BSP confidence that raising rates as early as August would not,
Raising the rate.
sorry,
we're
cutting
not,
rates. Sorry, cutting rates by as early as August
Yes.
would not reverse all the gains
Yeah,
made
that
by
would,
the monetary.
of course, still be the monetary board always remains data dependent and on the decision, and of course it will have to take into account all the latest available information at the time that the monetary policy decision is made. But again, the April number was actually better than what was initially expected, and we will see, depending on how the moderation in inflation progresses, after there's a clarity that the uh, the the base effects have already been observed.
Gov, how much weight does PSP place in terms of supporting domestic demand? Because Q1 growth was at 5.7%. It's below target and it's below what the market expected.
5.7% is a very respectable number. It's among the fastest among the Asian economies, among the economies in the region. So actually, the the main consideration, of course, would be how inflation progresses with respect to the target, because we want to, as already been mentioned also in the policy statement, you want to ensure sufficiently tight monetary policy settings until inflation settles firmly within the target range.
Gov, last, while the Q1 growth was respectable, it is still below the 6 to 7% target of the national government. So
yeah, but
is
it
there-
should not really be growth numbers should be taken in the context of the entire the global environment, and it continues to be strong compared to all the rest of the economies in the region. And going forward, of course, we are already seeing that the global growth picture has seen some improvement in the latest scenarios of the IMF, whereas before the downside risks to growth were emphasized, it's now the outlook is now more even, and there have been some upward revisions. So we'll have to see what happens also with our trading partners. I would note that in the if I were to relate this to the latest outlook on the balance of payments, we're now seeing that exports will expand this year, and that should be a source of growth going forward. Actually, in Q1 figures, exports were very strong.
DG, in the last meeting, also policy meeting, there was some minutes. There was a mention that there's a 50+% chance that we will breach the target this year. How has that changed now?
The risk is still there, but it's now a little bit lower.
Thank you, DG Daquila. Any more questions?
Good afternoon, DG. Victor from GMA. DG, previously it was mentioned that the El Nino will be contributing 0.02 percentage points to the inflation this year. Just wanted to ask if it's still the case right now, or have there been any adjustments to that? Thank you.
And ask if Zeno has the exact number, but I recall it's still essentially the same as before. Of course, since El Nino is expected to end sometime in by the third quarter, there should no longer be any El Nino episode. Then actually the impact of El Nino on inflation will already not change significantly. So Zeno or Lou?
Thank you, DG. Yeah, we'll shift to La Nina by the third quarter of this year. But looking at the latest assessment, the staff continued to look at the supply-demand conditions for key commodities, including the cereals, rice and corn, as well as meat, including pork and fish, uh, and assess the impact of El Nino. The numbers are very similar to what we have in the previous meetings. It's slightly less given what we saw back in April, the numbers. There are some improvements in inflation conditions, although some remain high, including, for example, rice. But year-on-year inflation for rice, for example, has gone down a little bit. So the numbers are fairly similar, but a little less than what we have inputted in the previous policy round.
Thank you, MD Zino. DG Dakila, any more questions?
Hi, sir. Kai Ordinario from Business Mirror. I just wanted to ask regarding your growth forecasts for the third quarter. You said growth is largely intact. The
Yes.
growth path is largely intact. So for the full year, 6 to 7, do you have an estimate for the third quarter and the fourth quarter?
The growth numbers are really in line with those coming from the DBCC.
So no exact estimates for the third.
Thank you. Any more questions?
DG, just to be clear, which particular inflation risks did you see last meeting that have eased or are no longer there this time around, so that we will have an idea?
Perhaps Gino can also chime in. But these are the upside risks to inflation. So the impact of the transport charges would be slightly lower. The and we have a new risk from toll rates, but it's very minimal. And again, for electricity rates, the adjustment, the risk from that would be lower for 2024, but we've shifted it to 2025, which accounts for the shift in the past of the risk adjusted forecast. As you know, we've shifted some of the risks to 2025. Zino may also want to add. I think he covered that.
Thank you, DG Dakila. Any more questions? All right, we proceed to the question sent in advance. This is from Michael Ricafort of RCBC. How would the proposed revision of the rice tarification law affect the inflation estimates?
Okay, so that's something that we're closely monitoring. Currently, the proposals in Congress involve restoring some regulatory powers of the NFA with respect to warehouse registration and monitoring, price stabilization in specific emergency cases, regulation of foreign investment, as well as the another feature is the extension of the Rice Competitiveness Enhancement Fund for another 6 years. So we're waiting for the final version of the bill from both the House of Representatives and the Senate to have a comprehensive assessment of the possible impact on domestic rice prices. But in general, we'd like to say that we support efforts towards further liberalization, especially for food commodities, and liberalization will help ensure their availability and affordability and mitigate the impact of commodity shocks on domestic prices. We also note that following the effectivity of the rice tariffication law in 2019, domestic rice prices have fallen steadily and both headline and rice inflation have eased. So this has led to benefits for the general population. And rice inflation was actually broadly stable from 2019 up to 2022. And that's despite the pandemic and the Ukraine-Russia war, which led to an increase in fertilizer prices and other input prices. And it's actually only recently that rice prices drove up inflation. And this followed the significant uptick in international rice prices and after India's imposition of the rice export ban in July last year, and also given the worries because the El Nino episode coincided with that imposition of the export ban. So meanwhile, the proposals to increase support to rice farmers through RCEP and extend its effectivity for another 6 years will help to limit upward pressures on rice prices and further ensure stable rice prices in the long run.
Thank
Thank
you,
you.
DG Dakila. Our next question comes from Emmanuel Lopez of Colegio de San Juan de Letran. Considering the cost of inflation and the value of the dollar vis-a-vis the peso and its significant influences to monetary policy, don't you think a prolonged high policy rate will prove to be harmful to investment spending and therefore employment and export? Therefore, a decision to hold on to high interest is like choosing the lesser evil.
Well, the impact of the monetary policy stance on inflation and economic activity in general is taken into consideration by the board in coming up with the decision on monetary policy. So all of those factors are actually taken into account. But again, the question has also already been partly answered by the governor's earlier answer, that we are now a little bit less hawkish compared to previously. So actually, the period of tightness in monetary policy will not be as premised in the question of a long duration that will have harmful effects on the factors that were mentioned in the question.
Thank you, DG Dakila. Our next question comes from Lee Chipongyan of Manila Bulletin. Do you expect the peso to remain volatile until the BSP cuts rates? In relation to that, are you looking at just one rate cut this year or at least two?
Let me just cite the year-to-date performance of the some currencies in the region. There are a number of currencies that we are monitoring. Actually, the Philippine peso is in the middle of the pack. Year to date, the peso has weakened by 3.2%. But on the other hand, the baht has weakened by 7.1%, the won by 5.3%, the Taiwanese dollar by 5.2%, the rupiah by 4%. The ringgit is almost at the ballpark of the peso at 3.0%. The Singapore dollar weakened by 2.4%. So the first thing that you'll see is that it's not really a matter of peso weakness, but of dollar strength, because this has impacted all the currencies that I had mentioned. Secondly, it's not really, if you compare the volatility of the peso against the other currencies, it's not really that volatile, because other currencies in the region have weakened more than the peso.
Thank you, DG Dakila. Do we have additional question on the floor?
Yes. That's too early to answer. The board will have to look at all the available information.
Thank you. We have a question from this side.
Sir, will the risk-adjusted inflation forecast be a fixture in BSP's indicators, or will it fade away once things actually
We'll
cool
have to
in terms of
see.
inflation?
I suppose that when the risks fade, the gap between the risk-adjusted forecast and the baseline forecast will also narrow. So the information content of the risk-adjusted forecast will no longer be as important as, but that would be a subject of further discussion going forward. Because in the past, the two were not that different anyway.
Thank you, Gov.
Thank you.
Sorry. Just wanted to ask, sir, household final consumption expenditure slowed based on the first quarter. So wouldn't that throw a monkey wrench on growth expectations, at least for the coming quarters?
Actually, if you were to look at the factors which led to some of the slowdown, you'll see that the slowdown coincided with the period of still high inflation. Actually, in particular for food inflation. And of course, when food is a basic necessity, so when food prices are high, that leaves little discretionary purchasing power of the consumer. And as the inflation picture improves, then that should be supportive going forward of the consumption numbers.
Thank you, DG Dakila. Do we have any other questions online or from the floor? All right. If there are no more questions, we would like to thank everyone for their time and attention this afternoon, including those watching us live on our Facebook page. This ends our Monetary Policy Stance press briefing. Maraming salamat po.